Welcome to the GrowthCap podcast, where we chat with CEOs, investors, and other key industry leaders to uncover insights and strategies for accelerating growth and succeeding in business. I am your host, RJ Lumba, Managing Partner of GrowthCap LLC. In this episode, we chat with Vinay Kashyap, a partner at Mainsail, which is a growth equity firm focused on bootstrapped software companies. I've known Vinay for some time. He possesses a unique humility and engaging personality that draws people in. He's someone CEOs can speak openly with and trust as they seek capital and counsel on growing their companies to the next level. We caught up recently in Mainsail's offices in San Francisco. While overlooking a clear view of the city 30 floors up, we catch up a bit on recent life events and then begin our conversation. So Vinay, thanks so much for taking the time. It's good to see you. It's been it's been probably like a year since we last saw each other.
Yep.
Or more than that. But good to sit down with you. Maybe what we could do just to kick off the conversation is chat a little bit about your background and leading up to Mainsail.
Absolutely. Well, thanks for having me, RJ. Appreciate you taking the time and all the work you do in the growth equity market. So my background is I started my growth equity investing career in 2006 with Summit Partners, working in their Boston office for several years and then in their London office. And I had done short stints in consulting and investment banking, and then found my way to Summit. And my three partners here, investing partners at Mainsail, are also ex-Summit folks. So we have a decent amount of Summit DNA in the firm. And at Summit, I was focused upmarket from where we are. The funds that we were investing out of at the time were a couple $1 billion. And we were looking to deploy 60 million plus per investment. And the original DNA of Summit has some similarities to what we're doing at Mainsail, which is focusing on more founder-owned companies, bootstrap businesses, first institutional equity into these companies. But by the time I was at Summit, that had evolved dramatically. And so after several years of kind of training there, which was a wonderful experience and had some great mentors and learned a lot, after business school, wanted to join a smaller platform and was introduced to Gavin Turner and Jason Payne here at Mainsail, and a lot of what I had read about and understood about Summit in the early '90s, it felt like some of that was trying to be replicated, but with some modifications to what we were doing. And the two key modifications were, one is we were focused exclusively on founder-owned bootstrap companies. We were constructing more concentrated portfolios, so kind of 8 to 10 platform companies per fund. And the second modification was we were really working closely with the entrepreneurs through a operations team to help grow the business beyond just providing capital and the kind of more generic strategic or M&A value add that you find in private equity. And so Mainsail was very early in our lower mid-market category of identifying that as an opportunity. And the two tenets of Mainsail, the bootstrap focus and then the operations team, which we've developed and invested in over the years, work very well together. And so I've always enjoyed working with founder-owned companies, with entrepreneurs, with founders. I've really enjoyed being the first institutional investor in a company, being a significant equity holder. And so we're usually owning at least 30, 40%, up to 100% of a given company. Really rolling up our sleeves and working closely with entrepreneurs, and I'm able to do that every single day here at Mainsail, which is great.
Excellent. And so let's talk about Bootstrapped, if we can. What makes that an attractive aspect to a business?
Yeah, it's a multi-level question, and if you go to our website, you'll see a lot of our positioning and is towards the bootstrapped entrepreneur. And so one is that it's a wonderful filtering mechanism for capital-efficient software companies. And so from our perspective, if you can grow a company to 7 to 10 million of recurring revenue without taking on institutional capital, with just maybe some friends and family money, or where your customers or your venture capitalists, generally you have found a very strong product market fit. the demand side of the equation is taken care of in those situations. And so we really like that as a filter as we're sifting through hundreds of companies every year. It's a real good truth serum for a product market fit in a company. Secondly, the entrepreneurs that tend to build these companies have certain characteristics that we really like. They're fiscally very conservative and responsible. They really understand the value of a dollar, and they have a heightened, I would say, kind of sense of opportunity cost. They really know how to spend a dollar, how to spend a minute of time. And then when we do invest and provide capital and resources, we find that the allocation process of that capital and resources is done fairly intelligently. And that's something that we also philosophically here believe in profitable growth. We can have some cash burn along the way, but we're really focused on companies that have the strong unit economics and the underlying business models that allow for capital efficient growth. And so, the filtering mechanism plus the quality of the entrepreneur has really led us to focus on bootstrap companies. And then secondly, we feel like we can really help. As you know, the industry is competitive. There's a lot of private equity firms, a lot of software-focused private equity firms. But our operations team is really tailored to the bootstrapped entrepreneur. We do an annual survey that you can see of bootstrap entrepreneurs. We have a database with tens of thousands of bootstrap companies. We survey the database, and we actually understand what are their pain points. What are their biggest issues that they face in scaling? And usually we hear product, talent, sales and marketing. And then we actually custom tailor our operations team and our value proposition to that bootstrap entrepreneur. So if you're a company that's not taking outside capital and you're meeting with 10 different private equity funds, the messaging resonates, and then the actual value proposition resonates quite well. And so it's our way of focusing and really sticking to our knitting and specializing in this segment of the software market.
Great. And it's interesting for I think a lot of folks in our audience that are either CEOs or maybe institutional investors. When they think of the growth equity space, it all falls into this one big pool of it's capital, private capital for growth stage companies, and there's not a lot of understanding around the differences between each fund or each firm, whereas there are, if one spends 5 or so years in the space, they'll really understand there's a lot of difference between a Mainsail and another growth equity firm. So maybe the operations and the playbook aspect, you touched on that. Are there, maybe there could be a case example or something you might be able to share with us of how you've been able to kind of identify areas of a business that you could help and were able to execute on it.
Yeah, absolutely. Case studies are very useful. So the first investment I was involved with at Mainsail was a software company called Zen Planner. I think in many ways exemplifies a classic Mainsail investment. One, it was founded by an entrepreneur who himself had a problem that he wanted to solve. And so that's a common theme that we look for in all our investments. And I would say 75-80% of the investments we make, the entrepreneur is their own first customer. It's a really interesting component of what we like in a good business. And in this case, the founder was a martial artist and had a martial arts studio that he frequented that did not have any sort of business management software. So it was running on spreadsheets. It had a classic physical point-of-sale terminal. And so he actually was a developer. He developed some software, and he gave it to the studio that he was intimately involved with, and that was the first customer, right? He was kind of servicing a real pain point, something that he had seen over the years. Built the business up to several million of recurring revenue. He had brought in a professional CEO. But when we got involved, it was a 30-person company based in Denver, Colorado. They had a couple hundred fitness studios as customers. And it was a situation where we loved the end market. We loved the trends in kind of boutique fitness. We liked the authentic problem that the entrepreneur was solving, and you can kind of see that authenticism in the culture of the company. So everyone really had a real passion for fitness studios. And then we really liked the CEO, this gentleman named Jeff Gardner that they had brought in. And so we did a majority investment in the company, majority recap, and we rolled up our sleeves and we got to work. And so we recruited an entire team there. We recruited a chief technology officer. We recruited a VP of growth from LogMeIn. We brought in an independent board member named Joseph Esses, who's the CTO of OpenTable. So we had a real good understanding of SMB businesses. And when I say we, I actually mean Mainsail. We have an internal recruiting group here, and we use this internal recruiting group to bring talent into our companies. And then we got very involved in a number of functional areas of the business. And so obviously first audit, KPI deck, instrumenting the business. That's a real first thing that we like to do with the companies. You can't change what you can't measure. And then we spent a lot of time throughout the partnership period on customer success, on understanding, in these SMB SaaS businesses or micro SMB businesses, churn is always an issue, and really understanding how to manage churn, how to look at churn from a variety of different perspectives, what pieces of the product need to get used early to create good retention mechanisms. And one of our operating partners, Taylor McKinley, is really specialized in customer success and really engaged closely with his counterpart at the portfolio company on the churn side. And then simultaneously on go-to-market, we built up a sales team of 2. By the time we had exited the company, there was over 15 quota-carrying sales reps. We were a global organization, and we had built out an inside sales kind of BDR lead gen program. And again, very closely involved with our operations team, kind of showing the company, the playbooks and the learnings that we had along the way. And we're constantly developing the playbooks. And so when we look across our portfolio, we look for best practices in each of the companies and use that to inform these playbooks. And we're now up to actually 95 playbooks that we can kind of offer across every major function of a B2B software company. And ZenPlanner ultimately grew and was exited to GI Daxco, and it was a wonderful experience, I think, for all people involved, and was an example of a really kind of successful Mainsail partnership.
Yeah, one of the things I noticed, and you mentioned, having an ecosystem and bringing in a lot of skill sets, to the company, is that Mainsail seems to have a very unique culture. And obviously you're a big part of that, being one of the partners. But it takes a strong culture, I think, in growth equity to bring all these resources to you and to your companies. Is there something you could share about how you, maybe internally how you think about culture?
Yeah, it's a great question, and I think we think about it a lot, especially given our experience at Summit and how we wanted to evolve our experience from there. So I think a few tenets of our culture are, we really the investing and operating piece of our business fit together really nicely. In that, I think we truly believe, kind of Warren Buffett, the more intelligently you know how to run a business, the better investor you are, and vice versa. And so everyone here, though we do delineate between an operations team and an investing team, we work very closely together. And so we have an operating partner sitting on most of our boards. Our operating partners participate in the due diligence process. And then the investing partners and the investing team spend a lot of time learning and understanding what our operations team is doing. And so in our Monday morning meetings, everyone, normally in an investment firm, you're sitting around, you're just going through pipelines, you're talking about new investment ideas. Our operations team is in the meeting, and we're spending time talking about projects that we're doing in the portfolio and reviewing on a weekly basis case studies where we've had successes in the portfolio. And it's really a virtuous cycle where that obviously then enables our investment team to go out into the market and obviously explain that to entrepreneurs that we're trying to invest in. So I would say the first core tenet is really this kind of nice matching between the investing and operating side of our business, and we all really enjoy that. I think a lot of the investors here in another life would probably have maybe been software CEOs, not just kind of finance guys. The second core tenet is, we just kind of really believe that life's short and you should get to choose who you work with. And the nice part of our business and our end of the market is we only make 4 new investments a year, 4 new platform investments a year. So each partner makes 1 investment. And that really allows you to sit back and take your time and wait for the right pitch, right? And wait for not only the right company, but the right entrepreneur, someone that you genuinely want to form a 5, 6, 7-year relationship with. I think that kind of patience, which I think other firms may not have much larger funds or have much more aggressive maybe needs from a capital deployment perspective, they aren't able to pick and choose who they work with. And so we take that philosophy externally and then internally, where we really recruit folks onto the team who are low ego, who are humble, obviously who are driven and smart, but also who can approach a bootstrap entrepreneur in Cincinnati or Kansas City or Nashville, Tennessee, and have a real eye-to-eye, kind of heart-to-heart conversation, and do so in a way that they want to work with us. Mm-hmm. And that's ultimately our business. Is we trade on a reputation, and these entrepreneurs have a lot of choices. Mm-hmm. The market is there's definitely competition, and they ultimately choose a set of people and a firm that they work with. And when we exit, there are references. And if our references don't speak highly of what we do, then we're out of business. And so we pay very careful attention to the culture internally and how that interfaces with the cultures of our companies. And so far I think we're doing a fairly good job at it, but we can always do more and do better.
Mm-hmm. And then for some of the other, I'd say younger professionals within the growth equity space in our audience, are there like 1 or 2 or 3 things that pieces of advice or insight around this profession and what you think makes for a good private equity investor or growth equity investor?
Yeah, that's a great question, and I'm probably in that younger category myself and learning. It's been 12 years in the market, but that's only a handful of exit cycles if you think about the 5-year average hold period. And so, I think about the business and I think about the job in three components. Generally, I think about it in terms of sourcing and idea generation. I think about it in underwriting and deal execution, and then I think about it in portfolio company support and exit. And I think just like anything professionally, you need to find the right mix of what you enjoy doing and what you're good at. Mm-hmm. And I think you can always evolve both of those over time, especially what you're good at, and if you have a good learning mindset. But I think within the private equity landscape and even growth equity, probably the emphasis on those 3 components is different firm to firm and category by category. And so I think from my perspective and what we do at Mainsail, because still about 2/3 of our investments are sourced proprietarily without the investment banker involved, and I would include growth cap probably more in the proprietary column in that it's not a broad auction process. The sourcing aspect matters a lot. Mm-hmm. So you have to enjoy traveling, you have to enjoy kind of being on the hunt, if you will, for great companies. As we say in our business, we kiss a lot of frogs, mm-hmm. and you have to be resilient and have thick skin and ultimately enjoy, really a very sophisticated sales process. And then similarly in our business, once we make an investment, because the companies are previously bootstrapped, you have to enjoy rolling up your sleeves and participating in the growth of that company. And so we are recruiting management teams, we're completing management teams, we're doing, I would say more than half of our companies are now doing add-on acquisitions to increase scale. We're adding board members. We're participating in product roadmap conversations with all of our companies. I mean, that's the level of detail that we get into. 1 is because we enjoy it. 2 is because it's good business. And 3 is because we allow ourselves to have the time to do that. So I'm on 4 boards. My partners, no one at Mainsail is on more than 6 boards. And that's by design. And really, we should all be on average 4 to 5 boards at any given time, which enables us to engage. But back to your question, I think in terms of being a young investor and figuring out where do I want to be, I would kind of look at those 3 components, mm-hmm. of investing and figure out what you like. And if you want to be more on the execution side and reviewing SIMs and bidding on lots of deals that you may ultimately not win, then I think an upmarket buyout shop might be a better fit. If you want to participate more in the front end of the investment spectrum, right, the analysis and the stock picking aspect, less so on the company growing and board work aspect, then I think there's plenty of late stage, kind of venture funds that fit that category, right, where you're kind of a capital provider and a stock picker, but less so involved from a board kind of day-to-day aspect or week-to-week or month-to-month aspect of the company. And so I think it really comes down to figuring out what you enjoy, figuring out what's necessary in the job, and then every day continuing to learn, because there's no books that you can really read. So it's really about finding good mentors, and it's very much an apprenticeship business. And it takes literally decades to learn how to operate, and still very early in my career progress.
Great, Vinay. I really appreciate you taking the time here. Before we sign up, is there anything that we didn't cover that you'd like to talk about or mention, or we could it could be kind of open forum to any insights you can impart. If not, that's great. That's fine too. But I like to at least give that opportunity. If there's
appreciate
anything you'd like
that.
to mention.
No, I would just end by saying, really excited that Mainsail gets to participate in this ecosystem. We've been doing it as a partnership for 15 years, previously at Summit for probably another 30 years. And so this growth equity piece of the landscape is a really exciting area to work in, where your returns are driven by growth. We generate our returns through the recurring revenue or transactional revenue growth of our portfolio companies. Not through financial returns, and generally not through multiple arbitrage either. And so it's an exciting place to work, and we appreciate that there's folks like you covering our kind of niche piece of the investment market, and excited that we got to sit down today, and hopefully we get to do it again soon.
Yeah, me too. Great chatting with you. Thanks again, Vinay.
Thanks, RJ.